Hi, today I'm going to walk you through our Cash Gap Evaluator. We created this tool for small business owners to help them to understand how much cash they'll need to go through with a project. So perhaps there's a new location that you want to build, or hire some new employees, or make a big technology investment. So this tool will help you understand where you are right now in terms of the amount of cash available, as well as how much cash you'll need to complete the project. And then you'll be able to make a decision. Do I want to go forward with the project? And how much cash will I need to get from an external investor or the bank? We're going to walk through the tool right now. And there's a project already created. But at any time you can go and create a new project over here. You can have two projects at a time running. If you wanted to create more projects, you can just delete one. So right now it says we have one of two available, but you can create a new project, the project name, what your expected interest rate from the bank would be, or the rate of return expected from the investors, how long the loan term is going to be, as well as what your current cash on hand is. Those are the fundamental assumptions at the beginning before you start entering some of your other data. So we're going to jump in over here into the current project, but at any time if you have feedback for us to improve the tool, you could go into the feedback button, you can email us here, and we're also going to send a survey as well. We're excited to hear any of the feedback that you have to give so we can keep improving the tool for you. So we've just called this project test 1. You can call it whatever title that you want. The first tab is the data entry tab. So we have your current operations as well as the particular project. So the amount of months will be based on how many months that you view the project, that you expect the project to last. So the point of this tab is to understand how much your current operations will be providing in terms of your cash as well. So you don't need to raise additional cash if your current operations will be providing some cash to be used for the new project. So you can add additional rows at any time, and you can also do an update of all of the rows to the same number, or you can click into any particular row, enter your number that you want to change. The operating activities goes through the revenue and expenses, so you would add your numbers here, and then also changes in your working capital, which affect cash flow. If you're running an accrual balance sheet, then you would make your changes to your accounts receivable and accounts payable here from your income statement, as well as if you need to make investments in inventory or other types of assets that aren't really reflected on the income statement, then you'd include those here. And then you would have your other cash flow that you're expecting related to your current operations. So you have cash received from loans. So if you're any other than the project, you're going to get a separate loan for another purpose, or you have equity that is going to be contributed by yourself or other owners. Those would be increases in your cash. And then you have outflows through purchase of equipment or debt payments or distributions to the owner. So everything would be input as a positive number, but in the reports it'll show as either a cash outflow or as a cash inflow. And you can always update the name. You can always delete certain ones, like sales. You're always going to need sales, so they don't have the option to delete it, but many of the other rows you can delete or add new ones depending on how your income statement looks like. And then you have the new project costs. So there'll be some costs when it comes to the new project, and in order to get it running. So that could be for new equipment or technology, or you could have consultants or contractors that are helping you to build out the new space or upgrade your technology. So you would add those in here as data entry as well. And then also, after the project's done, what's the ongoing monthly impact? So that's once you've reached the steady state and the project is completed. then what will be the ongoing impact? So over here, once the project's done, we're not expecting any more contractors, but there's still going to be a small technology fee. So this case study was for a new technology improvement project that the business is working on. So there was some high technology fees during the project with some contractors to set it all up, and then there's a low monthly ongoing fee, but no additional contractors. Then when it comes to the benefits, so sometimes you'll have benefits that start occurring already during the project. So that might be increased sales or lower salary. And then there'll be ongoing, most commonly there'll be ongoing benefits that you're expecting. That is the reason why you're going forward with the project or considering the project. So over here, the technology is going to help sales increase. Maybe it's a new CRM, or maybe there's additional capacity that's going to be available to take on new customers, as well as a general technology cost reduction in another area of the business. Once you input the information that into the data entry, you can go to reports. So you don't enter any information in reports, those all come from the data entry. They provide really good reports that you can print out and for your own records or for the bank or other investors. And whether it's the cash flow forecast, whether it's new project details, and you have organized data there. So the main purpose of all of the information that you're going to be inputting is to come up with a cash gap evaluator. The main purpose of this is to figure out how much investor money or bank money that you need in order to go forward with a project. So if we walk through this report over here, what you're going to see is what's your expected cash flow from your operating business? What's your new project cost in summary in month one, and then your available cash on hand to get to what your cash status will be at the end of each month. And when you look at all the months together until you complete the project, how much external cash are we going to require in order to complete the project? And then we also have an executive summary here, which includes how much your expected present value benefit will be, what's the annual rate of return on the investment, as well as the loan and monthly repayment needed. At any time, you can change your assumptions. So you can update the project over here and change any of the different assumptions that you made at the beginning, as well as you can document some of the assumptions that you made when you did your data entry so that it's available for you to recall when you go back and look at it, as well as if you have investors or other people who are looking at the information, that they can see it as well. We hope you enjoy the tool, and looking forward to hearing back from you on how we can continue to make it better.